Hello viewers, good afternoon. Welcome. This is the Business X-Ray. It's a show supported by partners, as you already see on your screen, including Enterprise Uganda, Ministry of Finance, Uganda Insurance Association, among others. So we are with you every afternoon to unpack, some of the practical tools that you need, to make the right business decisions, to manage your business well. And today, we'll bring a very critical and important topic, which I believe should be really close to the heart of every businessman, and not just every businessman, but every person. Today we're discussing savings, insurance, and pensions. Now, in the course of the discussion, you'll understand how these connect and work together, and by extension, support your business endeavors. Charles.
Yes.
I think this is the time to greet our viewers.
Good afternoon, viewers, and I'm so delighted to be in this platform, sharing our ideas on business, and in this Business X-Ray platform, we go practical.
Very good. Now, we have a very, special guest with us today. Like we always promise you, we don't want to gamble on any subject, Charles.
No way.
That's why we bring
practitioners.
Yeah.
People you can trace and go and talk to again after the show.
Exactly. So for that matter, we have someone quite technical in this particular area. We have Nicholas Rutakome. Nicholas is the Vice Chairman, Uganda Insurance Association Life Technical Committee. We're talking pensions, we're talking insurance, we're talking life savings. You're most welcome, Nicholas.
Thank you, Charles. It's a pleasure spending my Sunday afternoon with you and the viewers.
Very good. Yeah. Charles.
Yeah.
Tough times indeed.
Very tough indeed. And if you use that word in terms of this week, we again had some tragedy that hit our country. In Eastern Uganda, there was a great entrepreneur with a long story of success, but with an amazing learnings that everybody, if you just wrote a book about him, you'd have just said, this is the book to read for you to go into business. And the later Tilo, who died and was buried just yesterday, was the proprietor of Teso Coach. He had no bicycle. He had nothing, but took off from that very rural setting and rural basic resources until he owned long-distance large buses. And it relates again to the story that we had not so long ago of the late Xavier Kitaka of Quality Chemicals. Yeah. But I bring this to this platform because these stories embody everything we teach here. Yeah. And we only tend to receive the details of this kind of journeys when the individuals have parted.
Absolutely.
And I feel so pained that that's the only time we have the humility, the calmness to now listen to the type of journeys these individuals have walked. Many Ugandans knew, especially from Eastern Uganda, they knew Atelo. But they knew him as a person you go only to look for school fees. A person you go to look for some money to assist you in your wedding or marriage.
Fundraise for community
fundraising,
school.
And nobody would want to hear how he started. Nobody is interested. Now, when you listen to the way the man started, many of our circumstances, people who are still alive, you just see that your circumstances are far more well placed than his journey was at the beginning. And that's the story I just wanted to leave with the viewers here, that when you see anybody who has made strides to try and succeed, they are past 5 years, they are past 10 years of a growing enterprise. Even if you don't get a moment to talk to them directly, somebody within their circles can give you tidbits on how their journeys started and how they make whatever they have made to shape up the way it has shaped up.
That's a good point, Charles, you bring out. And I think it's also a challenge to the media. Yeah. Because as media, and I must say because I'm one of them, we really have a duty and responsibility to highlight some of these stories and also position them so that others can learn from them. We tend to run so fast to give, how are they called? Biographies about people that have passed.
People have gone. Yes. That's the time when we start saying, oh no, he started this, this is how he started. Yeah. But please, we need to be able to say that this person has been in our midst. What do we learn from him? And most of their achievements, they are visible. The man owns buses and they are labeled. Ask yourself, where did he get them?
Yeah.
Who is he? Who was he connected with to get those buses? Where did he come from? Does he have brothers and sisters? Do the brothers have a pickup or a motorcycle? That kind of a conversation in itself, it wakes you up.
Instead of looking at the type of car he drives, eh?
Yes.
The luxury car and all that.
Correct. And he has arrived. He's the one. You go and tell him that you have been chased out of school.
Yes.
It's great for these people to assist. Much more if they can release their wisdom to others. And that wisdom, these people are more than willing to share. But it's so rare to get a successful businessman, people mobbing him or her, saying, can you have a moment for us next month? Because their time is so tight, so you plan ahead. Can you spare 30 minutes and talk to us about how you started? You ask many successful business people, hardly will you get them being overwhelmed by such requests as opposed to fix this hotel, roof this church, try and do something. This handout aspect is what we look for from them.
Thank you, Charles. And viewers, it's part of the reasons why we have this show, the Business X-Ray. We try to bring people in business practice, seasoned businessmen, to actually share with us their stories. And on that note, Charles, we had a very powerful story last week. If you can help us, you know, try to break down some of the issues.
Last week was interesting because we had an interesting person with certain qualifications or peculiarities. And then we went to do something, I would say again, fairly peculiar. And I thought, these are the kind of things at the Business X-Ray we want to bring to Ugandans and then tell you that getting into business does not need to be sophisticated. It's as plain as saying, what is the problem around me? What is it I have to try solving this problem and make the person with the problem say, thank you, here's some little money. That's the sort of the man we had last week. So last week we had a story of a person who was engaged in garbage collection and disposal. It was called Mr. Lutalo Crispin. But what I normally call general opening remarks, which distill the main points. There are 3 of them. And the first one is that the size and the ease with which you qualify for a business grant, whether it's a bicycle, whether it's cash, whether it's land, the size of that grant, the ease with which you access it, depend on what you have done on your own. What have you done as I come and see you in your difficult circumstances? You are battling with your farm and your garden has got a few beans you have planted and the beans are in weeds and thorns. You don't expect me to give you a tractor. Impossible. So in the story of Lutalo, this man went into refuse collection on his own, took off, and then in the process managed to buy a truck. And from there, he said, who else can give me a lending hand? Because the banks could not touch him. And because he had a track record, he had demonstrated commitment, the Belgian said, this is the person to work with. You have a profile we can believe in. But he had no profile in the beginning. He built it on his own. So grants will mirror what you've done in business. If you are so basic and you can hardly have a meal, we are going to give you seeds to plant. Don't abuse anybody who gives you seeds because you just look like a kilo of seeds that should be planted. That's where you should begin from. Point number 2 is that support of a trusted confidant is priceless at the business takeoff stage. This man started a business that was, you'd call, beneath his kind of station. Trained and had a degree in philosophy and theology, but in the process, he had to start from dealing with 3 people who wanted their garbage to be cleaned up. His wife said, doesn't matter, I'll be part of your story. Go and clean the rubbish yourself. Come back home, I have warm water for you. And tomorrow, let's see how many customers do you have. She comes again with all that kind of mess. She has warm water for him and also says, please, there's also a meal. Let's continue this journey. So you just need a lot of that. And there are many of our people who have come to Enterprise Uganda. And when we teach them these basic take-off points, you find that they have a challenge with their own trusted people or family who say, is that what Enterprise Uganda is teaching you? But that's the beginning, and the beginning doesn't define.
And there are many dreams that have died at that stage.
Yes, image. We demystify that image issue in our training until you just say, tomorrow I'm going to do it, no matter who is looking at me. Then 3, most often we tend to reduce business support to cash or to a handout. Whenever you want to go and talk to your uncle, even a person who would have wanted to talk to the late Etilo, they would not be going there to start saying, how did you start? I'm also starting. They go there saying, I'm short of this amount of money. Can you give me money? I want this kind of a machine. Can you finance this machine? We reduce business support to cash or some form of handout. Yet business wisdom is the gateway to all those things you are trying to raise your hand for. So as much as monetary support, inputs, or whatever it is are useful, work on your business acumen. It's fundamental. It's extremely important. Then specifically, there were a few other lessons that came out of Mr. Lutalo's story, and one of them was that what you study should not limit what you can do in adult life. And he tried to distinguish adult life from when you are confined in a conventional classroom where the lessons start from 8 up to a certain hour, and then the lecturer says next week there will be an exam. He says what you study should never limit. He studied with philosophy and theology, as I said, but now runs a waste disposal business, and even didn't have a conventional training on how to do it. He simply started talking to people who were collecting rubbish on KCC trucks. Where do you take this rubbish when you have put it in the truck? Where is Kitesi? When you reach there, how does it happen? Told him, move, go to where we pour the things. You will get the message from there. And nobody who was, these people were giving him this kind of education. They did not have to even say, but what's your education or whatever. They simply said, you bought a taxi or whatever, go to where we do this job, learn from there. And who was teaching the man with a degree? People with not a single classroom knowledge or teaching.
Their work is just to collect garbage.
Yes. And they say, if you want to join us, follow us. See what we do. Then 2, focus on the impact of the services to the customer, not the title of your business. You know, the title of waste collection. And the waste is of all grades. You cannot say this is the more almost delicate one, and this one is a bit of dry metal, this one. Everything is mixed there. Then you go in there, and the scent and everything, even the flies are saying, this is supposed to be our place, why are you coming to join us?
Actually, scent is very diplomatic. It's a
Yes.
stench.
Yeah.
Yes.
So, but the moment you do like Lutalo said, just ask yourself, that thing has been thrown away. It needs to be removed because it doesn't look well. And the moment you clean it, the place is acceptable, it's beautiful. It's now called the Capital Shoppers Parking Yard. A beautiful place, but somebody cleaned it. Now, the moment you focus on the contribution of your services, the title now doesn't really matter. And he was so proud in saying that, you know what, refuse will never go away. People are eating and discarding some aspects of what they are eating. People are wearing garments and discarding some of the things they have been wearing. The same thing with shoes. The same thing with your gut system.
Yeah.
It will extract whatever nutrients it can. The rest, the system says, I'm disposing of this. And was proud to say there needs to be somebody to participate in that kind of a space. Then he also again said that his wife was such a reliable shoulder to lean on. Not only was she supporting him emotionally, she actually pledged her salary to service a part of the loan he took to buy the first truck.
That was quite noble.
Very. This is a young lady where a certain parent has invested and she's earning her money, and now she gets into marriage. Immediately this salary is locked to some very definitive commitment, and the title of the business is not exactly exciting to an in-law maybe, But that's what he got out of his dear young wife. And finally said, that life is a personal race. You make that decision. The emotions, the name calling. Remember he said he was being insulted. And the people whom you are serving, they are simply saying, if you can go and do that kind of a job, maybe you can even deserve to receive some insults.
Yeah.
And he said, not all customers are like that. Many are appreciative. And then he said, much as I started in a basic form, 3 customers, today over 900, today over 16 workers, today 3 lorries, today respected person, and today is looking at many other opportunities. As he offers an example for more Ugandans to go into that sector, you never know, Lutalo, maybe 5 years from now or 10, would be something else.
Very powerful, Charles.
Very, very interesting.
Really, like you always say, it is very important to serve a particular need in community.
Correct.
And I think I see a really strong, sustainable business for Lutalo going forward. Because that need keeps growing.
It can never go away.
It can never.
If human beings disappear, maybe, but if we're here,
yes,
you go to Mulago Hospital where we're fixing issues, you must throw away something.
Something, absolutely.
You go to State House where we're receiving people of high level. That State House must throw away some. There's a garbage bin somewhere.
It's a given. Absolutely.
So he said, please, young people, forget the title of the job. Concentrate on the contribution you are making, and somebody will release the money.
I mean, garbage is a constant. It has to live with humans.
Yeah.
It's like risks.
Exactly.
And, we have the man in the house.
Yes.
In fact, on that note, Nicholas,
Yes.
and I'm sure my viewers really want to hear from you.
Yes.
Because when we hear insurance, to many, it would mean that sticker on the car.
Yes.
You know, that sticker we don't like so much.
Yes.
Because it's mandatory.
Yes.
For some, of course, there are those who do it deliberately, because I know you have other products in that space. Today we're talking about, because on this show, we look at savings, mobilization.
Yes.
Because we know you can't start a business
Yeah.
without some money. Yes.
And a saving behavior.
Exactly. Very important.
You sell,
Yeah.
serve 3 customers,
Yeah.
some profit came in.
Yes.
Did you eat it all?
Uh-huh.
Did you eat it all? If you did, forget that journey.
Exactly. So I want us to start at the point of where we can relate insurance with savings. I mean, how do the two connect? Because it's part of the title we shared with our viewers. And I'm sure many are wondering, what has insurance got to do with savings? Yes.
And we need a regulation like for a car sticker. Even after you put it there, it's again almost a policeman who will now tell you, please, it has expired. Because you didn't even want it.
So you don't know what's happening.
But
Yes.
in this particular case,
Yes.
this is a product which you should be saying, I must be committed to this product.
Absolutely. Absolutely.
Yes, so gentlemen, I think it's a very interesting topic that where we have to draw a connection. A savings, as in of itself, is a wider topic. Insurance comes in one of the forms. However, people do savings differently. Of course, the conventional thinking is that you will have money, spend, and then leave some surplus to spend. The best way to create a sustainable culture is always to pull off savings before you spend. That is the only sure way you consistently save. Where you, like Mr. Chich said, you've received a payment.
Yes.
The first thing you pick off is the savings. It's not like you first address all the needs you have. There's a balance, and then you save. It will never be there. And I'm sure our viewers have seen that. So a risk, like you said, is something that is always around us. There are only 3 ways of dealing with it. You can either minimize it by avoiding certain risk activity, broadly speaking, or you can avoid it. It's very difficult to avoid risk, but you can avoid it by staying in your house. I was told a story of a man who stayed in a house and an aircraft fell on him.
And now he said, I was trying to avoid this thing, it has come for me.
And
Yes.
you know, when they take statistics, they will say he also died in a plane crash and
Yes.
he doesn't have a passport, never got a visa.
Yes.
Yeah, so it somehow, somewhere it gets to you, or transfer. So transfer is where we come in as insurers to offer that option. So you can transfer part of that risk you can't tolerate to insurers, and then you sleep with a peace of mind. So savings is a good supplement to the transfer, in the sense that there has to be a need. The gentleman, the fallen icon from Tesla coaches, is a person who had reached a certain height. We are talking about him here. There are so many people who don't get the opportunity to be discussed at in a forum like this. And insurance is one sure way of creating dignity, or some dignity for people of all walks of life. A person who cannot have a legacy that big, one of the things you can leave for your family is a life insurance policy. And it is something that everyone should have. Whether or not government should make it mandatory is debatable. I'm not a fan of that personally. However, it's easier for people to embrace it. We are here to demonstrate that it works, and slowly by slowly, like the telecom service, will get it there.
I hear you.
The thing is, it's no one tells you to have a SIM card, but you have to have one in order to fit in society. So life insurance should be like that, because everyone has a life, and everyone desires to leave something for those that they are working for, because there is a lot of self-centeredness around us where it's about me. Insurance goes an extra mile. It is not necessarily for you alone, but even those you struggle to make a meaning for in life. And that the moment you start from that background, you will appreciate insurance very well. So savings, you can save for a short-term goal. That is very easy. You can go to the bank, open a savings account. You can use all these other avenues. A plan 1, 2, 3 years. I want to purchase that piece of land. I want to buy that car to ease my convenience. I want to do this. That is the tool that there are various tools that exist for that. Sometimes people even take loans as a savings because it knows the moment he takes a loan, is going to be forced to pay the installment. Whereas if he puts in, whereas if he puts in installments in the beginning, before you know it, there is a person who needs the money and it goes. So that's one way. Insurance now comes in for the medium to long term, and that's why we sit down, take time to study before we make that decision. Medium to long term can be a medium term target, like 5 years. You want to create something for the future education of your children, and you put it there. Long term is something to do with the example we used on the retirement plan. You realize that you have 20 years to retirement, and you need to have something in addition to whatever legacy you're putting in. It's better to always diversify. And that's when insurance comes in. Of course, the longer the term, the better the returns. The key thing it takes is discipline. And commitment at the beginning is the hinge on which this discipline rests. So that medium term bit, long term is where we come in. That's why you can have insurance alongside other savings mechanism in place, and we exist for that. We mobilize the funds, then we help you manage how to spend them, then we give you one thing that you won't get anywhere else. One thing that we take for granted when you're planning, you're making your 7-year plan, and it's as if you looked into God's notebook and said, I will be there in 7 years. So that's the key difference we make. What happens if you don't make it?
I hear you.
And that gap we bridge quite a bit. Not because we looked into God's notebook, but we use this game of numbers to make sure that we minimize that exposure.
I hear you.
Yes.
Now, very interesting story indeed. And, you know, this show is dedicated to the business community. And in this, we're looking at what others call SMEs, but we'd like also, Charles, to add micro. And many of these tend to think that the products that you're talking about are mainly targeted at the corporates. Someone working with a particular company, but not me ekikuubo shop owner or a shop owner in the suburb in Kulambiro and that kind of thing. Just help us understand. If I want to save through some of those products, the insurance products, which again you help us probably break down a bit.
Yes.
Do you cover me at that level? Yeah.
No, there's been a lot of changes in the insurance industry, particularly the life insurance side. 10 years ago, the life insurance industry was grossing about 9% of the entire insurance turnover. And this was not something to talk about. You probably never heard much about it. As I can tell you, as of now, we are about 30% of that. And
life insurance?
Yes. Globally, life insurance is about 46% of the entire insurance side. And in Uganda, we are likely to overtake the non-life insurance side on that. Not that they are not doing the right job, but we have more opportunities than them because we focus on people. And the population is growing, people are creating awareness. When I joined the insurance industry so many years ago, about 15 years ago, you're required to go to a doctor, get a medical examination to be allowed to get insurance. All those things have gone away.
Oh my God.
It is home. The practitioners have moved with the market. The people have embraced it. The people you're talking about in Kulambiro are buying insurance, maybe not to the grand scale that they should be buying it, but it's a very personal thing, and a person should be able to embrace it. And it's not one of those things that you find like it has a certain set of minimums. It is tailored per person.
So you've made it available to
Every
people
person.
across social and economic.
Yes.
I think he needs to just repeat the statement that I thought the viewers would be very interested to hear again. That 10 years ago, we needed your medical report before we can have a conversation. Today, we have had Ugandans beginning to have some of the life challenging issues that never used to be associated with Africa. Now, with that coming here, there's a person who might be having non-communicable diseases and he wants to take up a life insurance. Doesn't he need to go with that report? Because they need to just reconfirm that point.
No, the market has moved on to embrace people. Though, if anything, those are the people who mostly need insurance.
It's
and there's
amazing.
no discrimination on them.
I think
Interesting.
They are
that's a
embraced
interesting.
by every insurer. We
Because-
built capacity in the region. Most of the insurers are run locally. We do not have a lot of this. This is how it works in New York or London. This is Kampala, and we are doing it. And everyone has an equal opportunity. There's a lot of financial inclusion in the insurance sector. A few years ago, the regulator passed guidelines on microinsurance to add something similar to what you talked about, SME or microfinance or something like that, and to lessen the requirements for people at the bottom of the pyramid to access this. All these have pushed a lot of uptake on insurance. Of course, the biggest point of success has been more to the communities that are brought together by other things, but also even people on their own are able to acquire these insurance products. It's not as sophisticated as it might sound. It is as simple as your circumstances are. As you're dreaming to drive your Cadillac, someone out there is dreaming to buy his Jivina. The same story applies to insurance.
Or his new boxer,
Yes.
boda boda.
Exactly.
Charles, you deal with many of these business people. You coach them, you mentor them, they run to you for counseling here and there. What do we read from Nicholas's delivery here? But maybe before you come in, viewers, if you have any comments or question, you can forward it. We're going to flash our WhatsApp number on screen. Nicholas is here, and he should be able to answer a number of your questions on insurance and risk, savings and pensions. Yes, Charles.
Yeah, it's very interesting to have this kind of X-ray to a subject that many people consider totally Western and African, and even a conversation about a possibility, as he put it quite straight, that, you know, there's a possibility of death. In an African conversation, it's something that you don't want to almost bring up. So like saying, write a will now.
Yeah.
You never know, you might die. Write a will.
Yeah.
That's
It's a tough discussion.
That's
that
the
one.
kind of a thing.
Yes.
It's like saying, I'm writing it because I could die. Then you
Yes.
just say, no, this is not a conversation to have.
Yes.
I've got so many more years ahead. The people I've seen dying, they are dying at 81, 82. I'm 40. But it is so important to appreciate that, as he said, you have no idea where all this time for you to depart will come from. And when it does happen, there's no saying it is next week. Bang, it has done, it has happened. And the businesses and whatever you've been having and the family that you have had must take off from there.
Yeah.
The first shoulder to lean on is now the insurance product that you had. And to be there to say, you are not the first we are giving this comfort. We have gone through this kind of pain. Let's take you through on how to benefit from this. So that conversation in our African context, we need to bring it to happen. Two, the issues to do with sickness of workers. Sickness of relatives of workers. We are now talking of extended families. We do not necessarily only need to just give insurance benefits of life to workers, but even tell our own workers that, please, it's also in your own interest to use a small premium investment to look after your most close family members. Now, if you now break down, which I know it will come through here, you'll begin to see that it's not really so prohibitive. It's not as prohibitive.
I hear
It
you.
is just that we are trying to say, but what I'm trying to prevent is a subject I don't want to hear. So you want to say, let me just walk blindly. When I meet that situation, it's okay. It's up to the people who are behind or whom I leave behind to see how to sort it out.
They'll sort themselves.
But me, I've left.
Thank you, Charles.
So it's not good.
Thank you, Charles. I think that is quite powerful indeed. But Nicholas, coming to you, of course, we discuss here every day, Charles, the different savings vehicles. And I think you touched a little, on these in your preamble.
Yeah.
What advantages does insurance present in terms of savings, over and above other options? Because we have banks, fixed deposits accounts, I can save my money, others save them actually in, it's quite interesting, in children. They can say, I'll have more children, these children, I might follow back, just in case of anything.
Yes.
Others will buy cattle, others will plant trees and that kind of thing. So what advantages do you present over and above all those other options available?
That's a good, interesting question, and something I wanted to talk about. You mentioned saving in having many children. So on one of the forums I had a benefit of attending, someone called that revenge. They have strained me, so it's my time to revenge.
Oh my God.
Whatever it is. So it's almost as if you signed a contract with them. I'm lending you. It's not a sure way of planning a future. Because one of the things we serve to prevent is that let the future generation deal with their issues. Let them not strain the way our parents strain to look after our grandparents, or the way some of us are straining to look after our parents. Many times we don't even have the assurance, or we do not have the liberty of thinking that we do not have the assurance that our kids are going to tolerate that. Because then the kind of questions our children are asking us, we couldn't ask our parents. So one of the things could be that what were you doing when you are in your youthful years?
Yes.
So your colleagues are busy in that villa where the retirement people, the wealthy are, and you're busy here hustling us for cash. Where are you living in the same country? So it's one of the things we are trying to solve. Financial.
And you are saying so and so was your classmate.
What were you doing? You're all Woodonian. So one of the things that you mentioned that I wanted to clarify on is all insurance, all financial tools of savings, investment vehicles exist for a reason. There is a reason why you put money in a bank account. We do keep some of the money in the banks. So banks exist for that purpose.
Yeah.
You need cash as a sort of emergency at any time you can access it. So you should continue with that. Insurance exists for that long term, medium term goal that you've named. And that's why in banking you can sprint to a savings. You can put in as a sprint. Insurance is more of a marathon. You release your gas periodically, and then at the end of it you're able to go through.
Okay.
So we do have that. So an ordinary person does not have 10, 15, 20 million to fix in a bank to get a reasonable return.
Yes.
Whereas in insurance you can get the same return with a small amount that you can put aside, 40, 50 a month, 20 and that kind of thing. For a longer term you get that benefit. It has a spiral effect in the economy as well. Every time people have made commitments to save for a long term, it has a spiral effect even to their business unknowingly or unintentionally.
Okay.
Because one of the challenges we have in the economy is the cost of money is very high. To borrow money and you're going into production, you have to sell your produce so high so that you're able to service the loan. Part of the reason is because there's a lack of liquidity, enough liquidity in the market. So the lenders have to either borrow outside or borrow from people who are selling the money very expensively. However, with development of sectors like insurance, where more people are committing for a longer term, does not only give them a sure future, but also insurers are able to invest in the same economy through the same other instruments you have to bring down the cost of borrowing. Currently, a lot of people, government borrows a lot and sometimes competes with the business world.
It crowds up the private sector.
Exactly. So then you have other supporting institutions like NSSF who really hold the economy when they need some liquidity. Insurance industry has the capacity to grow tenfold NSSF in the next few years, and just imagine how much of an impact that will have on government borrowing, development of infrastructure, development of business and producing a manufacture, this little manufacturing of goods that can be afforded by a common man. So that's the bigger picture. The small picture, the easy way of looking at it for a person is, do I have a liquidity plan in the next 7 years? Of course, we know people have businesses. There's always uncertainty about liquidity in the business. You've tied out 60% of your assets are in a fixed item that you can't sell at certain times because of a challenge or two, or because of the uniqueness of the challenge. You could have bought a software, for instance, to ease your bidding. It's part of your assets. But are you able to sell it to realize the money? So insurance provides this backup plan for that.
Hold it there, Nicholas. Actually, you raise a very important point. And Charles, this is like, it is a given. You talk to many business people, maybe 10, 8 will tell you, we need cheap loans. They normally use the word cheap, not affordable. And when you talk about insurance's role in mobilizing long-term funds that are affordable as well, I think you talked about affordability. And because, I mean, you're quite on point on that. But the question I wanted to ask, because we understand, for instance, your members in life insurance are really sitting in hundreds of billions. When I look at NSSF, the amount of money they have, the last I checked, I think the fund was in the excess of, what, 5 trillion Uganda shillings?
No, 13.
Actually, 13 trillion Uganda shillings. Now, that is huge. It's massive. The question then becomes, how do we free these long-term savings for onward lending to the kind of business people that Charles coaches, that Charles mentors, you know, to really benefit and see that dividend? Because I imagine that if they can be able to access affordable credit, probably they will employ more. They will actually bring back more business, you know, backward linkages and all that kind of thing. How do we free these long-term finances?
And actually, just to reconfirm what you've just said, Charles, you'll find that one of the biggest causes for failure to repay loans is a mismatch of the facility you've taken with the purpose for which you've taken it.
Absolutely.
You've taken a short-term loan to put up a mall.
A long-term investment.
You're putting up a mall, That mall will only release your returns over a period of time. And I do know of a seasoned entrepreneur. I don't want even to mention the gender, because if I mention the gender, the story has been in the press, so recent. You go for this massive building, ground floor has gotten some tenants or users, but even those have not taken off fully, but the next floors are empty. But you got it through a short-term facility.
Absolutely.
You could even call it 3-year facility, but it's not in line with real estate. So when he pointed out that fact, I said, this is one of those things where government must begin to say, do you want private sector to thrive? Yes. Please, can you, in addition to strengthening the UDB and having a special facility for agribusiness, try to address the picture in a broader sense by supporting the insurance sector, for example.
And his people.
So really, it's a very good question. There are many, many bad loans we have booked in the banking portfolios, and they are related to mismatching
between
facilities.
The reason you're borrowing for and the cost. Nicholas, you are in that seat. What would you wish for?
No, it's something that may not easily succeed without a supporting policy from government. I'm not saying government makes insurance compulsory, but one of the things that government could do, for instance, for people who have income and they have committed to a long-term savings objective or medium-term savings objective, they could be given a sort of a tax holiday or a tax. It's an allowable deduction before tax is applied from their regular income. Government would still get their money because they always take precedence when we are lending money.
Is it not happening?
We don't have that.
Because I know in NSSF, when you access your savings, that's one incentive that has been put there. You are not taxed at that point.
No, I hear you.
And it has helped a lot. People look at it and they delay even to access it. Now, as you delay to access it, you are leaving these resources still in circulation to provide that kind of a buffer for people who want long-term resources.
And another challenging thing, Charles, is you know, because what Nicholas provides are basically top-up schemes to what NSSF is giving. And for most of these schemes, actually, we pay tax because I was part of one that I know for the fact. And I think the point you are raising of policy support, that's where it now becomes...
No, there should be no shyness here. Because the benefits, as you've just seen, the benefits are so powerful. We are talking of an economy that has got only short-term resources. You can't build the private sector using short-term resources.
Absolutely.
So if the saving schemes that we're having in the country can have that kind of longer outlook on how soon they can touch their resources because of the benefits associated with that vehicle, then you've really given this economy something that is sustainable, something that Ugandans themselves are saying, we love this and I don't want to touch my money.
Absolutely.
Because if I pulled out from there and then I start taking it to a bank, and then that interest which I get from the bank, it is subjected to a specific interest. The one of NSSF is not. It should be similar to this.
Absolutely. Well, it's quite interesting, and I'm sure our viewers are really following, because, and I want to again come back to you, Nicholas, on trying to draw this relationship between savings and pensions and insurance, because we've ended up now sitting in the pensions area, because the three are interlinked. So I don't want us to lose our viewers. I want you to really explain for us and the role of insurance, especially in the pension subsector, because most people actually look at insurance as just insurance. It's of late that we've started appreciating your role probably in promoting savings, like with the education policy. I think that has been very popular. But now pensions. Yes. What is your role there?
So pensions, as you know, gentlemen, is the end game of life. It's like the ultimate reason to exist. I've retired, I've worked. I spent my first 23 years getting educated. Then I added on a few years of work, or a couple of years of work, and now I've hit 60. I'm going to live the next 40, 30 years of my life not straining, but enjoying my life. I've lived my life for my children. Now they are independent. That's in a nutshell what pension is meant to do. In a country like ours, you have to work towards it. No one's going to give you that money if you didn't save it.
I hear you.
So government put in place a policy, so those working in the private sector have to put aside 15% of their income. Employers contribute 10, employees contribute 5%. The money is not enough, but it is something.
Yeah.
It's so firms like industries like ours exist to supplement that money with additional savings regularly.
Okay.
Like I said, it's a marathon
Yeah.
that would be able to build that. So that's one leg of the journey, building a fund for you to live on. The other leg of the journey is now you've been working in the private sector. You're working for the enterprise. You've been promoted. Sometimes we make the mistake of thinking we cannot be entrepreneurs by setting up a business. We can be entrepreneurs in other people's businesses if there is governance and all that. There's nothing wrong with that. However, you've been working with them, and now all of a sudden you want to venture into a business that you've always loved, but you have no expertise to run it. And most likely the business model has changed. So of course one of the ways you can partake in the business that you want is to buy a stake in one that is running, and then you make a return. That could be a good move if you have a financial advisor or an analyst to do that for you. But the other sure way of doing that is to buy an annuity. There are different types of annuities, which are insurance, life insurance products.
Okay.
And the annuity gives you a guarantee that you put aside this fund and you've been earning 5 million a month. Okay. And we are going to give you 5 million until you die. Because you can live on 5 million, and that's, you know, no matter how rich you are, you can't eat 2 plates at a go, or you can't drive 2 cars at a go. So all this wealth you want to have is you want to derive cash flow from it. Yes. You get, because if you have an asset that doesn't give you cash flow, then it ceases to be, it's like an antique, a piece of art, you know, you put on the wall.
Yes.
That's not what everyone wants. What someone wants is, can I get cash flow from this?
Yes.
Can I be shielded against inflation? Can I live on it? Can I go for holiday once a quarter?
Yeah.
Can I be able to go to the golf club, or go to my other club where my lifestyle suits, that kind of thing.
Yeah.
And that's where we play a key role on the decumulation. That's the retirement end game. It is not that easy. It is not as easy as saving. It is a bit more sophisticated on structuring an annuity and getting it through the economy, because 2 people can spend 10 million in the same economy, and one has a positive impact, another one has a negative impact.
Yes.
I'll give you an example. I get the 10 million, and I've always wanted transport business, and I buy 2 borders. One of them is stolen, another one is crushed.
Yes.
And within 6 months, I have nothing left.
You're done. Yeah.
And the 2 people I was employing, are gone.
Yeah.
Another one picks the 10 million, starts a small business,
Yeah.
like the garbage industry business you talked about.
Yes.
And within 2 years, it's employing 6 people.
Yes.
They have spent as money in the same economy, but
Yes.
one has a positive impact, another one does not have any impact.
Yeah.
So many times people receive this money at retirement,
Yes.
and it vanishes. And by the time they realize 2-3 years down the road, they are going back to employment. And that is a negative to the economy, and that's where the revenge on children comes in, and all that. When you buy products like annuities, of course, needless to say, it has a bigger impact on the economy, because either this money is invested and lent to businesses that are going to employ more people, pay more taxes, and then also grow value for you, and then the whole spiral goes on. So those are some of the options we present to the market.
Charles, you want to come in before
Yes,
we go for a break?
it's important to get as much as we can from experts like Nicholas, because the questions that the viewers may be holding, one of them might be that here I am making my savings pension program such a way that by the time I reach 60, I need a regular salary. Now, this is Africa, this is Uganda. The salary of 5 years ago is still fixed at 5 years ago scale. Inflation has been galloping. The thing has been eaten off. Do this pension, now this regular check that you keep getting, does it in any way get adjusted for inflation, or that's too complicated and it's the kind of thing we must live with in Africa? That's real one. The other one is that the one of bullet receiving. You've saved, you've reached 60, they just invite you, your check is ready. Or please, is this the account we are sending the money to? Go and check, we put it already there. Now, that is another one that has got its benefits and also its challenges. And I think we shall touch on the challenges of that bullet thing as well later. But then I wanted just to hear from Nicholas.
Yes, so the reason why
a person who retired 10 years ago
still getting the
is
same
still
pension.
getting a salary of 10 years ago.
Same amount.
So the reason you move away from the pension guaranteed by a state with a fixed budget to an annuity that is given by a financial institution that is able to forecast, give you a guarantee and all that, is to shield yourself against things like that. Because when they say this is your income has to grow with a level of living expenses, and all these are factored into the structuring of the product. Because you sit down with a person, he gives you a guarantee that for either a period of time or your lifetime that is remaining, this is what will give you. And it is not the starting that ends, but it is what makes sense with lifestyle, living expenses, and the economy. Certain things, even to do with a change of currency and all that, can be factored in the moment the products develop. There is critical mass and that kind of thing.
In effect, the purchasing power to a great extent
has to be preserved.
is preserved.
Yes.
That's an
Very,
interesting
very,
one.
very key point.
I think that's quite powerful.
Yeah.
And I'm sure our viewers are following.
Yeah.
Because some might say we're using a lot of English and that kind of
Yes,
thing.
because somebody will
But
say,
it's
no,
simple.
but you see, they don't know that inflation is
Yes.
everything.
Yes.
My money, that was enough to buy 2 bulls.
Yeah.
By the time I pick it,
it's
I
now
can't
gone.
even get a goat because inflation has eroded.
I think that's
it.
a very important one. Also looking at where we're coming from historically,
Yeah.
especially in the area of life insurance. But the fact that it's able to reflect the realities, you know, in the market at a given point. Yeah, but on that note, we're going to take a very short commercial break, viewers. I know I've seen so many of your questions coming in. Nicholas will be able to respond to them after this very short commercial break. He's the expert. We have him in the house. Welcome back. We are still discussing insurance savings or life savings and pensions. We're trying to look at how insurance comes into this equation and how then does it benefit or flow into your business or your life if you're a household. Now, Nicholas, I have quite a number of questions coming in from the viewers. I have Rachel from Kigali. I must say we have quite a lot of viewership across the region.
Yeah.
So it tells you, Charles, how cross-cutting the business language is.
Yeah, there's also a very constant person who listens, Eddie from Chigala, and keeps giving you very interesting feedback.
Absolutely.
To the extent that you wanted this platform or this show one time to be hosted in the city of Kigali.
Interesting. Very interesting indeed.
Yeah, that was
So-
what Eddie was saying.
Perfect, perfect.
Yeah.
So Rachel from Kigali is asking, the processing of claims and the barriers insurance companies put in place for customers is a disincentive. What does Nicholas say?
Processing of claims, delivery of a promise is an issue that insurers have worked on to address. Not only the practitioners themselves, but regulation as well. And there are so many avenues of where there's a dissatisfaction, and then you go and get that addressed. One of the things that we've really worked on is in that line is to build the trust and get the claims paid. One of the biggest challenges with a delay on claims and maybe not paying claims is the mismatch between expectations and promises. And that's why programs like this exist.
Okay.
So a person buys an insurance product, it's important to understand what to get out at the end,
Okay.
not to discover when the end has come. And that's why we are having a lot of training for our personnel. We have a college that is dedicated to insurance alone, to skill the people who are doing this work as a career, to ensure that they do the best work, and we are moving in the right direction. We have one of the best regulations in the region, and the regulator has really done a lot of sensitization to ensure that insurers are in line. Not that they were not in line, but to ensure that there's that extra eye. Trust is something that is earned. I can't say just trust us or what, but we, as insurers, we try our best to go beyond.
And it's important because you're
Over
setting a
and beyond.
promise.
Exactly.
Good.
And especially given the way most of the agents that are used to try and market the insurance products, they are paid on commission. So they could be tempted to gloss over the real benefits without assuring the beneficiary that, please, this is how the benefits are going to be given to you.
Yes, absolutely. Now, I have Thomas Erutu. Charles, this is a very interesting one. And Nicholas, because it's saying currently he has an insurance policy with one of your members. I won't mention the name. But he's saying, however, I'm interested in seeing the insurance policy recognized as a security for one to take a loan from the bank. Because I mean, I've been saving so much money for the last 8 years. I have 100 millions with you.
It's my asset.
And I want 10 millions here.
Yeah.
In fact, in my asset portfolio, I take that as a box as one of. So can we mix the two?
It's a very interesting comment, and that's where we are going. Recently, bankers are getting more interest in insurance as a way of enhancing their customer offering, and that is where we are going. Currently, for you to get insurance for a loan, the bank arranges it. The reason is simple, because it's easier for administration, because very few people have policies to the magnitude of how much they want. But with the increase on uptake, that is definitely going to be an option. It is one of the things, like you say, that boosts your portfolio size. One of the things I talked about at the beginning was the dignity of a person. You go to a bank to borrow money, they first assess what do you have. And insurance is certainly for the future going to be one of those boxes to tick and say, yeah, he's insured. So he's a person we can actually grant credit at a lower rate because we know he has assets that are there.
Very good.
Yes.
Now,
Charles.
but probably also, I just want to add to the viewers the point that as they use their insurance savings to go and access a loan, they should not use that loophole to break the system. The system is saying you only access this thing at this particular age. But now you are saying, okay, now they are refusing me to do that. Let me take the money from the bank. Default, I will have taken my money. Then now the insurance company can pay off the bank the other side. Again, much as we are talking about trust from the perspective of you looking at the insurance company, we should also have the same word labeled on your face. You are going to borrow. How genuine is your borrowing? Or you are trying to simply say, how do I beat the system? This thing is just denying me my resources. The purpose of that facility was clear, and that purpose was well understood.
That's a very important
Go
point,
there
yes.
when you are also very honest. Otherwise, the benefit again will be killed off.
Will be eroded. Very powerful indeed. So I have Thomas, Nicholas. No, it's Francis. So he's saying, can Nicholas try to highlight the availability of registered life insurance providers in Uganda, and how can one identify the genuine ones? Very interesting.
So the licensed life insurance companies in Uganda are 9, and they are listed on the website of the regulator and the website of the association. I think it's the easiest book I can direct people to. So the regulator's website is ira.go.ug, and then the UIA, which is the association bringing together all insurers, is uia.co.ug. And you can see a list of licensed insurers, and all of them, there are 9 licensed insurers and there are 9 genuine life insurers.
Very interesting.
By the time they're registered there,
Yes.
they are the genuine ones.
They are genuine ones. Good. I have Joel from Boyogere. He's talking about the education policy. Apparently, I have about 7 questions related to education. Seems really a very attractive policy to many. He's saying, I took an education insurance policy for my kids, and the monthly payment was 100,000 for a 5-year plan. The thing is that after paying for 6 months, my finances plummeted, and I couldn't pay anymore. But now my vendor tells me that the least time for payment should be at least 3 years or I lose out. Is this really fair?
So that's a very good question, and we keep meeting that question. So like I said on the first question, it is sad that he finds that out then. It is important that he gets to know that, quiz that before entering the agreement when he's taking it out. Probably the product he bought is structured in a way that within the first 3 years you can't get out. Meaning, one of the features I talked about, because that's a medium to long-term savings tool, the insurance company has put the money away to a long-term, through a long-term vehicle, and it's not accessible within 6 months. That's why they are giving you a 3-year plan, because of the market dynamics and the design of the product. The sad story is not knowing from before you sign and then getting there and discovering there, which is something that we are working on as an industry to ensure that our force out there, our front line, give all this disclosure. We've gotten banks on board to ensure that this financial advice is also given to people, such that by the time they enter, the expectations and the promises are aligned.
A very quick one related to that.
Yes,
bankers have similar savings products. They'll tell you you've gone for a 12-month savings product. In the 11th month, you have had a need and you want to break it. Ideally, you should get nothing in terms of interest. But you get back your principal. Now, what bankers have done is to improve on that and say, no, we will now not give you nothing. Within the bank, we also have 9-month facilities, 6-month facility. Because you've disrupted the one of 12 months, you now qualify for the one of 6.
Instead of going home empty-handed.
Empty-handed. I'm not sure whether this is similar in terms of insurance experience. Otherwise, they can borrow it from there. If the thing was 36-month horizon, but in the 34th month, for whatever reason, he failed to complete that journey. With only 2 months to go, he failed. How do you treat that case?
Exactly.
So just like the example you used on banks, there is a period that is stated out. The key thing is not whether the period exists or not. For me, the key thing is a person not knowing what they are about.
They are going into. And I think,
because no matter how attractive it is,
you know, salespeople can be very convincing. So they may not tell you the full picture. And I think that journey, that approach you're taking is quite good. That people get to be the right education on what they're buying. I think that's quite powerful.
And I want to, again, to re-echo that by saying bankers know this and they are watching. Whenever it is time to give a loan, the loan agreement has covered everything. The thing is not too long. They even keep on saying, well, it is fine print. What's the fine print when you have been reading a more fine print Bible than that fine print you are talking about there?
That's right.
You know?
That's right.
So reading documents that commit you, I want Uganda to learn to appreciate reading documents.
That's a good one.
It's very important.
So the responsibility lie on both sides.
Both sides.
You, the guy who is taking this policy.
Yes.
Because it's an investment you're making.
It is.
And the guy who is selling you, because Nicholas is doing his responsibility on one part, to
Correct.
educate you.
Yes.
But then, you know, you can educate someone who's not willing to learn.
Yes, and then the other thing is,
it's not paying attention.
the document we have given you to read, we are not saying before you, if you leave now without signing, we're shooting you. You can't even take it home. Am I right?
Yes.
And come back the next day and say, I've signed it. But you have had 12 hours, 24 hours reading it.
We actually give you we give you a month to change your mind.
Look at that.
Read through and then change your mind. But the thing is, it's unfortunate. I'm not saying we are right is wrong, but it's unfortunate that someone goes through that. It's never the intention of the industry. Our intention is to do that. We are talking about a long-term plan.
But I think, generally speaking, we need to have a middle ground somewhere.
Yes.
Okay, I have Kenneth here. Kenneth is saying, what should a starting businessman have in mind before going for an insurance package? Still talking about education.
Yes, so there has to be a target, and the target has to be named. Otherwise, it will just remain a dream. So a target is named. For instance, you talked about education. There has to be a university. There has to be a secondary school. It's not only a university, by the way. Why the reason we mention university is that's the cheapest or the most affordable tool to have, because you assume to have time. But you can also have a secondary primary school kind of planning. So you name the university. You sit down with a financial advisor. He gives you the projections. He talks to how much you can afford. You assess. Many times it comes down to what you want. Sometimes people think it comes down to the money you have.
Yeah.
If something you want it, you go and get it. You can wait 1 or 2 months, but you go and get it. You find avenues. So you sit down and you say, me, I want to go to, I will not use Harvard or any of these things. It doesn't speak to an ordinary man. I will use Makerere, and you say, I want my child to become a lawyer because I've seen lawyers run this country. And then now we sit down and project for you that the law degree currently costs
this
3 million a year. And in the next, your child has 7-10 years to entering first year. And it's what you're looking at as 3 million now is likely to push to about 9 million. That means for a 4-year course, that's going to be 36 million. And now the other bit is you could die. So when you die, the child still has to go through not only for the law degree, but he has to be pushed to the university.
Oh my God.
So we look at all those possibilities.
Yeah.
Let's say the child is in P5. You want him to do a law degree. So those are 3 years of primary, 6 years of high school, and then law degree. You die when a kid has just done his P7. He still has to go through the secondary education. So all these are intertwined, and a value is attached to them. We discuss, you agree where the priority is, and then you sign below the dotted line, and we move on. The planning is very personal and particular, but the concept is the same.
So the message is you need to know what you're buying that policy for.
Exactly.
Yes.
Okay, good. Now, again, I have another question here from Christine. Christine is saying, I've had people talk of savings with insurance. Please shed some light. In case I have my salary, 40 million, how beneficial is it when I put it in your hands, say for 2 to 3 years? More practical.
You have your 40 million, you want to put it with us for 2 to 3 years. We do not primarily exist for that. There we will probably send you to a fund manager because your primary goal is to grow the money. We want to address something that is named, and we can give you a few ideas, but it has to come from you. If you want to put 40 million out for 3 years because you're retiring in 3 years, we can have a conversation. However, if you want to put it with us just for the sake of that, we may not just hurry to take the money because it's there. Probably there are better savings vehicles, or there are better avenues that can address that need. Okay. Our affinity, and we love the people who are trying to build capital.
Yeah, the periodic,
yes.
The discipline of periodic release of investment.
With uncertainty, there's this uncertainty. I'm getting my income, I've just gotten a contract. However, I'm not sure. So that the moment you have this thing, I'm not sure. We are your closest partner.
Very good. Now, I have Kenneth here. He's from Tech Buzz Innovation Hub. He's saying, thank you for the show. I want to ask Nicholas, what plans does UIA have to support youth in startup companies? They make losses for averagely 3 full years. In the livestock personal sense, that's life insurance, we can consider the young in self-employment. Do you have consideration for the young in self-employment, in other words?
So that question, I'm not sure whether I've understood it well. It's we would have products for people like that, or solutions for people like that.
The youth in startups.
Yes. So there are quite a number of ways they can actually work with us. One of the startup could be an insurance agency, where in addition to whatever skill they have, they can actually use it to distribute insurance. to the people. So that's a very big opportunity. Many times you can't talk about youth and you don't talk about technology, like the name he mentioned. Someone getting into the insurance industry with a tech background could revolutionize the industry. So those opportunities are there without them injecting capital per se, but just keeping an open mind, getting the ideas and moving the industry from one side to another, because we could be doing this manually. And then someone comes up with an artificial intelligence tool to reach out to the masses.
And there are all kinds of algorithms today which can sort many things.
Exactly.
But
So
what you've just commented there, and I hope Nicholas can settle that issue completely there. You've started a young enterprise, is making losses.
For 3 full years.
For 3 full years. Thus, do we have a product today that tries to accommodate a possibility of an enterprise that had been projected to be able to make some money, but unfortunately it's making losses? And maybe does that really
exactly
exist?
And maybe to add, Charles, because you know some of these businesses may not be making losses, leading to failure. We all know at the beginning, the beginning can be tough. It could be a good, brilliant business idea.
Correct.
But it needs probably 4 or 5 years to stabilize.
Yes.
And at the beginning, because it doesn't mean that when you're making losses at the beginning, you're into a bad business.
No, not at all.
Yeah?
Not at all.
So,
it's a good point. However, just to the basics, insurance in general exists largely to cater for what we call pure risks. So the 2 categories of risk we look at under there is pure and speculative. So pure risks are what
Nicholas,
that's a good one.
sorry, so we use statistics.
Pure risks. Let's go for pure.
To do our models. So
instead of speculative one.
so a person who has an enterprise, for instance, that is making money.
Yes.
And there is a pure risk that affects that business. The pure risk could be a flood, a fire, a storm, or something like that. And does not only destroy the assets that you're using to make money, but also takes you through 2 to 3 months of non-production, meaning you're losing income, which you would have made if the plant was there. So that can be computed and put a number put to it before it occurs. So that, of course, looking at audited financials or books of accounts or something, audited financials might look a bit vague or might look intimidating. But we look at the track record. How much have you been selling or producing per day, and how much of it has been sold? And those records are available. And then there we can come to partner with a business, give them that particular solution. However, there are things like business failure, and the failure is not something you can easily compute at the beginning objectively. It can
and the kind of parameters that could have led to it are numerous.
The mortality of a business that is starting up follows a lot of speculation.
Okay.
So on that one, I just wanted the listeners to know that please, your young enterprise, go for business acumen skills and acquire them. Enterprise Uganda and many other entities can assist you in that one.
And I think that's very important.
Insurance should never take over your burden to become a seasoned business player.
You have to have it.
You have got to play the game.
Good. I have Kate. I know we touched a little on this, but she wants to hear from you as the expert in the area of pensions, especially, or life insurance as well. He's saying, I just wanted the panelist or insurance to clarify if NSSF is not taxed when someone gets it.
So NSSF is not insurance per se. It's a national pension administrator for the private sector. And the law that NSSF has been running on is one where money at payout there is no taxation. There was a revision to the law that was put, I think it was put for approval, for passing, I don't know the legal term that is used, I'm not a police expert, that was proposing, currently for you to contribute to your NSSF, you contribute it and then they tax your income. For instance, if you earn, if your taxation is 30% on 100,000, I'm using just numbers, don't look into the implication. They will tax your 100,000 at 30% and then they take 15% off 100%. So what NSSF was proposing, which I think is a good thing, is that the taxation applies after NSSF is off. So if NSSF takes off 15% or 10%, then they tax the balance, which is 85 or 90, depending on the percentage that is being taken off.
Thank you.
So that was meant to address one thing. At the time of cashing out, if you cash out money before the age of 60, you will be taxed the same rate that you would have saved during the saving. However, if you keep your money there up to 60, there's no.
So the idea was to keep you.
Yes, to keep
saving,
you saving
that money
for
there.
that longer term,
Okay.
and then you don't get that. So yes, the answer is NSSF is not taxed at cash out
Okay.
currently.
Good. I think we'll shed more light on that.
Yeah.
Charles, I
NSSF
think one of these
people
days we
take
need
over
to
that,
bring NSSF probably. They come
Yes,
in the picture because you
we
can't talk
need-
savings without.
We need, and you can see the numerous questions associated with this subject.
Yeah.
How many people out there, they have got the education, they are degree holders, but this subject really needs to be unpacked in the simplest terms possible. You can see even people didn't know
Yeah.
that in NSSF actually this money comes out without. And if you look at 300 million and you are subjected to the normal taxation, whatever, as income, a huge figure goes off.
Yeah, absolutely. Without a
100
doubt.
million will go off. You are
Absolutely.
left with 200.
Absolutely.
Mm.
Still talking education. Someone here is asking, she needs you to shed more light on annuities.
So in a nutshell, annuities are products that are given, life insurance products that are given to a person with a lump sum at retirement to give periodic payouts for an agreed period of time. The example I used is you've gotten your 300 million from NSSF, you're 55, and you sit down with your insurance advisor and he tells you that we are going to be giving you 5 million per month for the next 30 years or until you die.
On the basis of this
Whichever
300 million
yes.
lump sum that you have deposited.
Exactly.
Okay.
So in a nutshell, that's what it is.
Okay.
There can be some other boosts, like every year that 5 million will go up by 15%, 10%.
Okay. And then the other thing that could happen also, which could be a follow-up question, is I've now picked my 300 million invested in an annuity, but soon after 2 years, I'm dead.
Yeah. So
Now,
those are now the dynamics. So what
do you
you've
lose
died
it out
after
because
2
you are no
years,
longer?
Who does it pass to? Is it your existing spouse?
Or it
Is
can be
your
passed
child?
on?
Yeah, those are.
Okay.
That's a good one.
Those are the
So you've
options.
answered another question. Someone was asking whether there exists a product in the market where one can save and get their money on a monthly. So I think that settles it.
Yes.
Yeah.
Charles, you wanted to add something there?
No, it's okay.
Okay, then I have someone here. He's saying, thanks for the program. It's Ambrose, actually. I would wish to know the comparison between, okay, he wants to know, we've seen people fighting to get their
Yes, their pension.
from some organizations, I won't
Yeah.
name. How easy is it to get insurance money? Could you share details of recovering this money? He's actually using the word recovering, very heavy. But I think it's real accessing.
Accessing the
Yes.
money, yes.
Yes. I don't know. I think I can't give much. This is better to demonstrate with figures. The fact that last year, 2019 or year to date, I think it's better to use year to date. Between the period of time, you know, we are talking about savings. We are not talking about eventualities as well. Between the time we got locked down to date, insurance companies have paid in excess of 3 billion shillings on people who have lost jobs on a monthly basis to keep up their installments as they struggle to get back on their feet, or people whose salaries were cut mid-term. They were cut to half or something like that to keep up with the loan installments so that loans don't go bad. And a lot of this is more demonstrated with figures. The payouts that companies are paying out on people who have reached maturities. Of course, the industry is relatively young, so you won't see a massive payout yet because, like I say, these are medium to long term. But these numbers will come out, and look out for them from an independent or a regulatory body on how much are they paying out on a quarterly, yearly basis. These numbers are published, and that number is quite important for a person to know how easy is it. The turnaround time may vary from company to company, but then even the complaints that come in when which are related to turnaround time also this information can be provided. From a neutral point of view, that is true, that happens. From a market practice point of view, the market conduct is, we have guidelines, we name the documentation required at the beginning of the cover, and I urge all you viewers, we take up an insurance product, please try your level best to ask all the questions before the commitment, because this is a long journey.
Thank you.
We don't have a marriage
a very
contract
key
with 6
observation.
pages, but
Yeah.
everyone understands marriage before they go through
Yeah.
it, and otherwise it will not go on for a long time. So
Very,
compare
very important.
insurance to that.
Yeah.
Thank you, Nicholas.
Yeah.
I have again another person from Kigali. He's called Emmanuel Twahira. He's saying, of course, the topic is very interesting, but he's wondering, do you have options where someone who is not in the country can actually access these products and buy them?
So people who are not in Uganda, that are Ugandan residents, it's very easy to get these products. They are available. The only thing they have to do is to access the documentation, sign it, and then commit. However, non-Ugandans who are non-resident, it's a little difficult because of challenges to do with legality and all that.
He's
We
actually
can cover
he's originally from Barara. He's a Ugandan working in Kigali.
Yes, that one is very easy. It's very possible. We actually advise him to take it up.
Thank you.
Yes.
I'm afraid time is not our best ally today.
Yeah.
But I think before I go into that, we have again another viewer from Kenya, Kibet. He's saying, I love watching NTV and especially your program. And especially savings and pensions today has made it for me. Please keep it up. It's educative and encouraging.
Very good.
I think we're having quite a number of people supporting us from the
Very
show.
true.
And
Very true.
viewers,
Very
I know there are many questions.
Yeah.
We can't really answer all of them, but we can give a promise, Charles,
Yeah.
that we're going to bring back.
Yeah.
Yes.
You will come back next time.
Yeah.
And the truth is that you can see some of the advice that Nicholas has just given, the closing statement he made.
Yeah.
There is no shame in asking all the questions before you make commitment.
Yeah. Yeah.
That alone is such a big statement.
Yes.
You get a document, the agent who was in touch with you is excited in getting the thing quickly cleared. Read the document. Everything most likely is captured in there.
In most cases,
Read it.
we just ask, where do I sign?
Yeah, where do we sign? Read it, read it, read it.
Good.
It's all captured there.
Nicholas, what are your parting shots today?
No, in conclusion, I would like to encourage Ugandans. Doesn't matter how small or big your income is. With the words of Mother Teresa, that your contribution might seem like a drop in the ocean. However, you have to realize that that ocean will be one drop less if you don't put it in. So as we build the economy, as we build society, I encourage everyone to take up a life insurance policy.
Thank you. Charles?
To me, it's really for us to know that there are so many vehicles available to boost us as individuals, as families, but also to boost our economy. And one such a vehicle is what we've just been sharing today. The insurance coming with the savings and pensions. Those immediately address the existence or the adequacy of long-term finance in our economy.
Very good.
Very important.
Dear viewers, we've just scratched really this subject. It's quite huge, it's quite large. We're talking insurance, we're talking savings, we're talking pensions. And of course, it's very important. We've always had these discussions about how you can make money, and Charles here has done a tremendous job. But again, it's him who appreciates the importance of how, a risk off taker in the name of insurance can actually help boost your confidence as a businessman and propel you to the next level. And on this show, we committed to bring as many experts as possible to fill in those gaps and try and answer those questions, Charles.
Very true. I
think that's very, very important.
It is. It is. It is.
Yes. So Nicholas today comes from Ugandan Insurance Association, and we have that partnership
Yes.
to actually keep engaging, to keep bringing such experts from the association to share with us, some of these very, very interesting ideas and topics. What message do you have for our people, Charles? We still have about 2 minutes for next week. Today is Sunday.
There is such a big potential story that I think we might disrupt insurance next week and bring it on board.
Yeah.
Because there's another entrepreneur from the Karamoja region who has such an interesting story that Ugandans just need to hear this. Just to underscore the fact that no matter where you are, if you build a business acumen, where you start the game from does not matter. And I thought probably next week we might have that entrepreneur. Then again, we bring Nicholas the other week. Yes.
Very powerful. Reminds me the story of Gino.
Yes, yes. Karamoja this time is very interesting
very
again.
interesting.
Yeah.
Very good.
Yes.
Well, thank you, viewers. That's all the time we had for this evening. I'm sure you've picked quite some very good and educative lessons from today's interface. Nicholas from Uganda Weather Association, thank you very much. And Charles, as usual, we thank you. I've been your host, Charles Boji. Until next time, have a good evening.